Hi everyone, today we're talking about Nordstrom stock and if it's a buy right now. This stock has been hit massively due to some revenue cuts, guidance cuts, and the stock isn't really in a great position and it's been going down quite a bit right now. And you could say it's a falling knife, and we're going to talk about if you should invest in this stock or if this is a stock that might be worth just avoiding altogether. So Nordstrom stock is basically sitting around at a 31 price now, $31 a share. If you don't know what Nordstrom is, it is a company that pretty much sells very luxury furniture. So we're talking about, the middle class to the upper class would be going into these stores and buying a lot of their furniture. They don't really sell, lower end cheap prices. And whenever I talk about a company like in that kind of sector, I always say like Wynn Resorts. I always like going for the companies that are the more luxury brands in them sector, just because you tend to still have very good price margins, good profit margins as well. Nordstrom exactly doesn't have this as much as the other companies, even though it does offer the higher prices. But overall, those are like the companies that I like to go into. In sectors like that, Nordstrom is a company that is a luxury company, so they tend to offer higher prices on their products. I normally like companies like that offer the higher range price of products, just because you tend to have good margins. In a recession, you tend to do quite well because that have money will still go out and buy things, where it's a lot more of the lower middle class that will kind of hold off buying a lot of products if they are struggling financially, whereas more of the upper class still have a lot of money in the bank account to go out and purchase things like the products that Nordstrom or the furniture that Nordstrom sells. It costs about $31 a share. Like I say, it's a luxury department store, and right now that PE is sitting around about a 10. Now PE wise, that's a pretty good PE. It's a good PE towards like the history of this company as well, and in the sector it's actually quite a low PE. Nordstrom is a stock that I did have a quick look on to see if I would buy. So I have done quite a bit of a deep dive into this company. The dividend yield is really good. The first thing that I saw was the price, the discount. And then I looked at the dividend yield and I saw the dividend at 4.61%, which is a really strong dividend. That's a company that offers a nice dividend that you can buy into this stock and get a nice return from. At the moment, it is down at 53% discount, and we'll talk about in a little bit why it's at a 53% discount. But obviously, you can see that it's lost nearly half its share price over the last kind of yearish. And the EPS growth is set to grow at 1.8%, and that figure is taken from 2020 to 2021. So this figure could change, but when we look at a company on my channel, what we try and do is we look at like the long-term growth and if this company is going to go up, because on this channel it's all about long-term investments. So I'm not kind of fussed what the company is doing right now. It's kind of what the company is going to be doing in the future, over a year, 2 years, 3 years down the line. So we're not really too bothered what it's going to do this year. It's in the future years. Obviously, right now, one of the reasons why Nordstrom is in a bit of trouble is because of the revenue growth slowing down, the EPS growth slowing down overall. The revenue is forecast to be at 1.9%, but to be honest with you, when we talk about that, I actually have a feeling that a company like Nordstrom has to offer growth. Otherwise, if it kind of went right, for the next 2 years we're not going to have any growth, investors would get spooked even more. So they've offered a 1.9% growth, but there is potential for that to be not that and be a lot worse. But at the same time, a few people do reckon there's a bit of sandbagging on and they'll be able to manage that growth and actually grow it a lot better. In my personal opinion, it's more likely to drop the 1.9% than grow more than 1.9%. So that's something to be careful of. So what's going on with Nordstrom right now in the company? One of the big main investments, and I think that's taken quite a bit of the focus away, is they've kind of got a new flagship store opening, and I believe the flagship store is in New York, and that's kind of like going to be like the new kind of store that everyone's going to talk about. Hopefully that's a store that everyone goes visits, and hopefully that'll offer hopefully increase sales growth. So they've been putting a lot of money into that, a lot of infrastructure, and hopefully that'll pay off for them. The only concern I have about that now is that furniture stores are one of those that you still have to kind of go see it in person, but they kind of have to develop that digital and online side. So even though that's really good, that's one thing that I'd be cautious of, is that even though they offer that, they still have to make sure that they have that online presence as well. The high street for me is kind of, the dying sector. So if I were them, I would just watch out for that and something to be cautious of. Bad management is something that I've noticed recently in this company. The ability to adapt to the changing economy, to notice problems when they're starting to start up, some bad decisions that I wouldn't have made. For example, there's more debt that's being taken onto that balance sheet, and also the digital presence has been cut, so the digital marketing advertising has been cut as well, which is something I wouldn't do. It's something that you, in my opinion, you should be growing more of your digital side than actual like standard advertising. That's the area to go, which Nordstrom isn't doing right now. Try and appeal to the younger generation rather than the older generation, and try and get them coming to your stores a little bit more is where I would go personally. So shout out to my Facebook stock. It's just another way that a Facebook stock is just going to continue to grow. But we'll jump back to Nordstrom. The big massive benefits to the stock is that 4.61% that it's currently paying out. But the one thing that I'm slightly worried on is that I'm seeing a little bit more debt on that balance sheet. And then with the debt as well, it means that there's a big higher payout on that dividend ratio. So the dividend ratio payout right now is about 50% on that dividend. So it kind of worries me, like, going forward, a slowing down of EPS growth, revenue growth. Can they carry on paying that dividend out? Will that dividend come at risk? That's something I'd be a little bit cautious of right there. When we talk about payouts, I would like payouts to be towards the 20-30%, and that means that the dividend growth would continue. If Nordstrom, after this bad year, would want to continue growing that dividend, would they be able to grow that dividend? Potentially not. And another reason why the dividend is so high is because of the fall that it's currently had with the share price. So in my opinion, I'd just be a little bit cautious on the dividend side if that's the main reason you're going to get into. Because right now it's definitely not got a sales growth. So the company share price probably won't grow too much because of the actual poor revenue growth. So you've just kind of got to look at this from a dividend stock. And when the main feature for investing into a stock is the dividend side of it, and that could be affected because of the company not doing that well. Something to be cautious of right there. So kind of my opinion in Nordstrom, and if I'm going to buy the stock, in my opinion, I wouldn't buy the stock even though the dividend is really healthy. For me, I always like a company that will have a good dividend and are able to grow that dividend, and also the share price grows with it. And then eventually you might be able to share, you'll have all that dividend income, and then also you'll have a profit on that share price that you could sell out of. And right now for me, looking forward into the next 2-3 years, one big main problem I see is this sales growth. There's a lot of potential for this sales growth to go either way. It could get a lot worse than this. So that makes me a little bit nervous investing in the company. Obviously the stock is in a downtrend itself. It's a little bit of a falling knife, and it's hard to try and catch a falling knife at the right point. You would at least wait for a little bit of a bounce before you would invest into a stock, maybe a strong quarter on earnings that sends the stock a bit more into a bull case. But right now at this share price, the falling knife, the risk to the dividend, which is probably the main perk of this stock that's at a little bit of a risky price, a little bit of a risky point right now. For me, I would sit back off this one for a year and then reassess it in a year's time and see what's going on with the stock and the management side of it going forward. So guys, that's me talking today about Nordstrom stock and if it's a buy in 2019. If you were looking into this stock, buying this company, I hope this video helped you. If you could give the video a like, subscribe, and we're getting towards 300 subscribers, which would be awesome if we can get there sometime soon. So thank you for that, and I'll see you in the next video.